Hello everyone, Jackie Crawford Ross with Remax Executive Realty.
And I'm Sofia Travayiakis with Radius Financial.
And we are at my beautiful new listing, 28 Goose Pond Path in Bolton. And what I thought would be a really good idea is ahead of the spring market, just talk about lending questions that buyers might have. And also go over things that we might be seeing in the Massachusetts real estate market for 2026. I think it's going to be a crazy year again in Massachusetts real estate. What are some things that buyers can do now to get ahead of the spring market?
Yeah, I mean, getting prepared and talking to a lender as early as possible is really important. We do soft credit checks now, so I think people still don't realize that you can do a pre-approval and get that information you need ahead of time and not hurt your score.
Yeah.
So getting a soft credit pull ahead of time, before you're ready to even start looking. Know your numbers. Do you need, a bridge loan? Do you need special financing? Talk to a lender early so that when you do find your dream home on a Sunday afternoon, you know what you need to do.
Yeah, that's a really good point. Getting everything together before you go to start look at houses. Because the last thing you want to do is see the most perfect house and you can't put an offer in because you don't have your stuff ready.
Yeah, everything is about speed, being prepared, be able to make the offer quick. If you need to talk to your lender about increasing your price, this is where it's important to work with local lenders and somebody that can help you answer your call at 9 o'clock at night. So really important to have that flexibility and be able to be confident in your numbers and your financing to move forward quick.
I work with a lot of clients who, they live in their first home, yay, wonderful, but they want to move on to the dream home. So can you actually explain bridge loans a little bit and why someone might want to consider it?
Yeah, bridge loans have been around forever. I would say in the last 2-3 years, a lot of lenders have modified bridge loans. And every bridge loan can be a little bit different. So you definitely want to ask the lender you're working with. Like Radius, we have our own proprietary bridge loan that we do with our financing that is not counted against you in your debt to income ratio. An example would be is you own a current home, you have plenty of equity, you want to purchase the next property, but you want to use that equity from the old house and put it on the new house. So we take a bridge, we take that a second mortgage, it's a lien that goes against the old home. Let's say that's $300,000. We take that bridge loan, that equity, move it to the new house as the down payment. So now you're left with a much smaller mortgage on the new home, better interest rates, right? You're putting more down, easier to qualify, and then I'm not counting that $300,000 loan against you in your debt. And that's what's really important is it's helping people qualify, right? Carrying two houses at the same time, not having to sell before you buy. And that's what the bridge loan does there for you is hopefully that you don't have to sell the prior house prior to buying the new one.
Yeah, dealing with the clients that I work with, that's what makes them sweat is, well, I know I need to sell my current house, get the equity from that to apply to the next house, but where are we gonna go? We don't know where the next house is. I don't wanna sell my current house before we find the next one. This is how you can do that, where you're gonna be using that equity from your house anyways. So this will allow you to start hunting, looking for that dream home, move in and buy that dream home, and then you can sell your first home.
It's really important to understand, having those options and being able to use a product like that to be able to move. And people are always, what's that interest rate on the bridge loan? It's actually prime, prime plus one, so 6.75, so it's 7.75. It's pretty good for a bridge loan. And then if you sell the house quickly, you might end up making 1 or 2 payments on that. So it's an interest-only payment. So it's a great way to be able to move on to the next house.
It's an interest-only payment. In that scenario of $300,000, that's a couple $100 if my math is correct.
Yeah.
And I think some clients will find value in paying a couple $100 over the course of 3 months to make sure that they can secure the house that they want and then be able to sell their current home. What are some things that might be new and different in 2026 mortgage land as opposed to years prior?
I would say the biggest difference in mortgage land is the opportunity to be able to use multiple incomes. Every buyer is paid differently now. So maybe you have, husband that's a W-2 employee and Mom, let's say, is a self-employed person that has her own business. Traditionally, you couldn't use that income if you didn't have the history, or maybe you don't show enough onto your tax returns, depending how you claim your taxes on your business. So we're able to do what's called stacking income. So now I can use the W-2 income and the self-employment income, make one income, and be able to use that to qualify.
Yeah.
So if you have any sort of different financing, different sort of pay that you're getting paid, either owning a business or
maybe you're a YouTube star.
Exactly. Having I just did an influencer, which is exactly how they get 1099.
So cool. Yeah.
So definitely any sort of outside of the box income, we're able to get financing. So it was harder 2 years ago. Now they've made it a lot easier for those people to get loans. Good interest rates. They're not astronomical. You have to have a little bit more money down than 5%, but ways to do those loans.
One thing that I want to go over that you and I love and use all the time is a 2-1 buy down. I find this very helpful, kind of going back to the buyer that we were talking about, that they live in a current home, they want to buy the dream home, so a bridge loan might be a great opportunity for them to do that. Kind of the same scenario. I work with a lot of clients who, they bought their first home back when interest rates were in the 2s and 3s. And now they want to move, they want to move from that starter home to the dream home. But the thought of paying close to 6% interest rate, it stops them. So a way that we've been working together and what I want to go over is a 2-1 buy down.
Yeah, the buy down helps that interest rate, and you can do a 1-year buy down, a 2-year buy down, a 3-year buy down. The most common is a 2-1, that's why you hear it, the 2-1 buy down. But what that means is, let's say the interest rate today is 6%, 6.0.
Yeah.
2-1 means that the interest rate is bought down 2% for the first year, it'd be 4%. Year 2, it would be 5%. And then year 3, it would go back to that 6%. But it helps those first, 2 years for the buyer to settle into that payment. Pay a lot less interest over time for those 2 first years. And the way that you get that buy down to work, and it is available on any conventional financing and even on FHA, but the way that you're able to negotiate that, it has to be done up front. And so it does have to be done with your real estate agent, with your lending professional on the dollar amount. It's negotiated in the price of the home. The seller can pay for it. There is a way for the lender to pay for it, but then you're gonna kind of pay for it in the rate. So it's always better to negotiate it. Just like you would ask the seller to pay for closing costs, we could ask them to pay for a buy down. So if you have a stellar negotiator like yourself, it's so a great way to get that interest rate a little bit lower for those first couple years.
Yeah, a lot can happen in 3 years. A lot of my clients, what we talk about is, all right, in 3 years, you don't have that daycare payment. Maybe you paid off your student loans. So even if you go back to where interest rates might be today, you might have some payments that have rolled off anyways. So that is just a way to get started and get going into the next home. Let's take the average home of $800,000 and you're able to do this 2-1 buy down. You're saving hundreds, if not close to $1,000 a month.
Yep, it's around $800 and something a month. We have plenty of people that bought the last 2 years and we're paying over 7%. They've been paying 6.5 the last couple of years, and now we're able to refinance them with interest rates dropping now, and hitting the 5s. Now we're able to refinance them. They've been saving the last 2 years. So, and that will continue, I think, to happen. I think our prediction is that rates will continue to drop. So if you find a house now, do a 2-1 buy down, you might be refinancing.
Why might I want to do this option, Sophia, as opposed to buying down points?
Right. So you can buy down points, which permanently lowers your interest rate for the life of you carrying that loan. And the reason why I say the life of you carrying that loan is, as I just mentioned, rates have dropped. So all those people that bought 2 years ago would be refinancing regardless if they did the buy down or not. So if you pay points, it's a lot more expensive. 1 point represents 1% of the loan amount. So if we're talking about that $800,000 house, that's $16,000 that you would have paid to the bank.
Yeah.
And if you refinance, that money is poof, gone. So all that money you paid for to the bank up front to lower your rate, now rates are down, it's just not worth it. If you do the mathematics on that, it just doesn't make sense. Worth it to do the buy down. Now, one thing a lot of people don't realize on the buy down, let's say you refinance after year 1 and you have money left over from that credit from the seller, you get that back. So you don't lose that money like you do on a permanent buy down.
What I think is the important distinction is, let's put it to the real estate gods that interest rates keep going down. If you wanted to refinance, but you still had money in that account, great, put it towards your principal. Use it to buy more furniture. You can do with that money whatever you want with it. Whereas if you buy down points, like you mentioned, it's gone. We could talk about 2-1 buy downs all day. It is one of my favorite ways to help my clients. Oh, I should also mention, not all lenders can do 2-1 buy downs.
Yes, that's true.
There's a lot of servicing involved, so that's why Sofia is one of the best lenders. What are some buyer mistakes that you see in the lending world?
One of the biggest mistakes they do is they think they have to save too much money. And, once I do the math and I do a comparison side by side for them, if they're like, I'm really saving for that 20% down. And you don't need to. We have programs at 15% down with no PMI actually. So looking at 10 and 15 down. And I kind of let people know there is options for you to do less money down. Maybe you're going to look at homes and the kitchen needs a remodel.
Yeah.
Why not put a little bit less down, use your own cash than getting yourself into more debt after? So really I think the mistake is there's a lot of information out there and online, and you can do rate quotes online, you can do calculators online, but really talking to a professional that can help guide you to a loan program that's best for your financial needs in the future too.
Yeah.
And that's a difference between working with a real mortgage professional and just walking in, let's say, to a bank and talking, to a teller or just to a bank professional that doesn't really have the financial background to advise you. I call myself the mortgage manager for life because we're helping your mortgage needs, throughout everything and really looking at futures and what does your future look like and how long do you need to be in a loan. If somebody's buying a condo and I know they're not going to live there more than 2-3 years, I'm definitely suggesting an adjustable rate mortgage because they're not going to live there long there. So why do a 30-year fix at that point? Pay the lower interest rate and do an adjustable. So not every program is for everybody, and so that's why it's important to really talk to a mortgage professional about your long-term and short-term goals.
Yeah, you can pivot that to also your agent working with a great realtor about what are your long-term goals. Because in that condo scenario, why don't we do something that makes financial sense for you right now? Do an adjustable rate, and then let's focus on the next thing, what have you, or pocket some more money now. Or back to the example that you were mentioning of I don't know where on the interwebs everyone says you need to save 20%, but sometimes it really doesn't make sense for the buyer to put 20% down because it might be more financially beneficial to save some of that money, put less down, update the kitchen and bathrooms or put a new roof on, what have you, then have your house reappraised. You might make more money doing that than if you were to put 20% down and pay less as a mortgage payment, what have you. So working with a lender that is local, they have different products, they're listening to what your goals and aspirations are, and then same with the agent. You're stuck with us for life. That's how we think about it.
Yeah, exactly.
Right now in 2026, what do you find is the average time to get a loan?
We can do it so quickly, being local, and especially if we've talked to the customer previous, getting that pre-approval, like we said, early, talking to a lender early, we can close it in less than 3 weeks if you really wanted to, so super quick.
And I don't think people know that. Is especially in today's day and age, and if you're working with a hotshot like Sofia, that makes you look just as good as cash. Like if you are in a multiple offer situation, and if I'm also competing against someone who has cash, like Sofia and her team can now be as competitive time-wise as cash, which is crazy. I don't think people know that.
And Jackie, I did want to let you know, we have a new product that I think will help your buyers called the 10K Promise. So what the 10K Promise is it helps you as a buyer in this competitive spring market that we're seeing coming, if you would like that step up from pre-approval and we want a full commitment, we call it a pre-commitment and the 10K promise. So Radius Financial will pay the seller $10,000 if you don't get approved for your loan. We're not even just saying, hey, seller, we're buying your house, for what you're asking, but if I don't get my loan, Radius is gonna pay you $10,000 and your buyer gets their $1,000 deposit back. So we pay them $1,000 and the seller $10,000 in case you didn't get a mortgage. So I've definitely had it help a buyer win this last month. They were competing against a cash offer. The seller did not want to give it to that. It was a builder that was doing cash. They really wanted to give it to that family. And then we offered the 10K promise and they were able to get the deal. So it's a step further than a pre-approval. It's a full underwrite. And with those, we're closing those 2 weeks quick. So just like cash, offering the seller an incentive to take your offer over other people's offers. So this will be something that'll hopefully help your buyers in the spring.
Definitely. For 2026, like you mentioned, I'm already starting to see competition and heating up. And if we're competing against multiple different offers, that's going to help someone stand out. Awesome. Anything else you want to add?
I think this is everything that can happen in 2026. We're excited for a great, robust year, and definitely reach out to both Jackie and I to help you with your real estate and finance needs.
Thank you so much. Until the next one.